I should have music. I don't this time. Sorry. Everybody, it's Abby here from the Virtual Savvy. I'm so excited that you are joining me. I think my computer is kind of slow right now, so I'm so sorry about that. Let me know in the comments if you can at least hear me. It'd make me super sad if you could only see my face and not hear me. So let me know in the comments if you can see me, hear me. I'm super excited today to be joining you with my good friend, my bookkeeper, my CPA, the most amazing woman ever, Melissa Whaley, the one and only.
Thank you.
Yeah, awesome.
Well, I'm stoked to be here.
Oh, we are so happy that you are here. We got a ton of response whenever we put out that we were going to be chatting with a bookkeeper and a CPA, that everyone's like, oh, I have all these questions. And so we are going to answer those here for you today. So if you are just joining me for the first time, I'm Abby Ashley. I'm the founder of the Virtual Savvy, and I help virtual assistants start and grow their own business from scratch. And every week we try to bring you something new, whether it's an interview or a certain topic that we're going to discuss right here. And I'm really excited to present this interview to you, where we're going to be really answering all of your tax questions. So a ton of you guys already asked questions in our VA Savvy's Facebook community. And so we're going to be going through those questions. We're really just going to dive right in because I know you guys are excited to get started. We have Anne here. Hey, everybody. Danita. Jessica, my girl, and Jen is here. Awesome. We're so excited that you guys are all here. We have already like 25 people joined us. That is sweet.
Sweet.
All right, Melissa, I'm going to just ask you first if you'll just introduce yourself, where you're from, and maybe, you know, how you kind of got started in this whole tax CPA world, a little bit of your background.
Well, awesome. Thanks, Abby. So, hey, everybody, I'm Melissa, and I am a virtual tax advisor and strategist for business owners, particularly online and creative business owners. So I know lots of you are hanging out here with us today. So I actually got started in taxes almost 9 years ago, which kind of blows my mind. It's been that long already. But I started working at a retail tax chain, got trained, had some really awesome mentors there, and totally fell in love with taxes, which sounds bonkers to most people because they're like, are you insane? Who enjoys taxes? I do. Because I love helping business owners, first of all. Like, my family's all business owners, so it's in the blood. And I love helping people take big, scary things and make it not so scary. So that is my goal in my business. So I work with people all over the country. I'm in California, Abby's in the Midwest, but we work together. So it's awesome, the power of the internet. And I help people just get their finances sorted out and do their taxes and plan and all that fun stuff.
And you are so good at it as well. If anybody knows me, I am definitely not the best with I don't love taxes and I don't love bookkeeping and all of the things. So definitely having somebody, no matter, what place you're at in business, guys, find somebody that will help fill the spots in your weaknesses. A lot of times we are like, oh, I need to get better at this. I need to get better at this. It's like, well, I'm a big fan of working on your strengths, like working on the things that you already love and you're passionate, and just have people help you with the things that are your weaknesses. Like, why I hire somebody to clean is because it's my weakness. I'm not good at it. So somebody else can clean and I'll focus on what I'm good at, which is hanging out with you guys. So, so we will, we're just going to jump right in. Thank you so much for taking the time to chat with us. And we're just going to jump right into answering you guys' tax questions. All right. So you have all of your tax questions answered. Maybe not every single one of them, but we're gonna do as much as we can to answer some tax questions for you guys. So, so here's I'm just gonna rapid fire. Let's just do this.
Do it. I'm ready. Let's go.
Oh, and if you guys have any questions, you can definitely comment below. If I don't see them right away, we'll scroll back through at the end and give you guys a little bit more time to do some Q&A. So don't think that I neglected you if I don't see your question right away. We will get to it, okay? So let's just start out pretty broad. Like, what is it? Especially, I know we have a lot of new people. Everyone let me know in the comments if you're like just getting started or if you're maybe like within your first couple months of business. What should a new virtual assistant know about taxes and bookkeeping? Just maybe one good tip. What should they know? Like if you know this one thing, what should it be about your taxes and bookkeeping before getting clients?
Okay, so I think one of the most important things you need to know is that you should be tracking things. It doesn't matter how, whether you have a literal just piece of paper that you're writing down your income and expenses, or you get set up with a legit bookkeeping system, track everything. And then side note, if you just like, because sometimes people literally don't know when you become a VA, you're self-employed, freelancer, whatever term you want to use, you're responsible for all the taxes. Like there is no taxes taken out anywhere by anyone for you. So there's going to most likely be a bill at the end of the year as your first year if you make a profit. So just be aware, and it's okay. But it's now on you to plan and prepare for taxes.
Yeah. And it's just one of those things that you go in knowing ahead of time. And that's why a lot of times we talk about our rates, and I'll say, please, 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 like, especially if you're in the US, please don't ever charge like less than $20 an hour. Like I really like people to do like the 25 or 30 if they're first starting out, even for admin skills, just because you are gonna have taxes taken out. And if you're charging $12 an hour, $10 an hour, $7 an hour after taxes and after expenses and after all of that, you're like, oh, well, that's what I made at my other job, or I'm just starting out. I was like, no, you're literally like not even paying for like the lights that you have on right now.
Exactly.
It's like not worth it. So, so definitely, I think your rate goes into that. So, any other like quick tips that you have for, people just starting out, or, as someone's business grows, what should they be doing, as far as keeping track of everything?
So a really easy way to help you is open a separate bank account for your business. And it doesn't have to be a business account, unless you go out and form an LLC or incorporate. But if it's just you getting started, go open a second checking account and run all your business stuff through that first, because that's going to help you. Because even if you do nothing all year long and it comes to tax time and you're like me 10 years ago when my husband had his business, I printed out 12 months of bank statements and had a binder and a highlighter. And that's what I was doing to find our income and expenses to file his taxes. So that is what brought me to this place now of going, I need to help these people because I know what it feels like.
Yep. And I'm a big fan of both, I know Capital One and Bank of America both have business checkings that if you just have your EIN number, that's all that you need to open one. So I really, really like having one separate. I used to use Ally Bank, and they actually shut me down because I was using a personal account for business stuff. So
they've done that to me too.
So I would go ahead and get a separate business account. All you need is your EIN number to do that. So okay. So walk me through the process. Once, a virtual assistant, they're starting out, they open up this separate checking account and they're like, all right, I'm ready to get clients. You get that first client. Woo, so exciting. Yes. Is there any, like for tax purposes, is there any documentation that we should be giving that person? Should they be giving anything to us? Like what do we need to know about taxes and the clients that we're working with?
All right. Yes. Because a form that you're going to hear about and this name thrown around a lot is 1099, right? And we go like, well, what the heck's a 1099? So what this is when a business owner pays another business for services, if it's more than $600 in a calendar year, they have to send you what's called a 1099. So it's kind of like a and kissing cousin to the W-2, you know, because you're not an employee, you're a contractor, you're your own business. So they're not going to have taxes taken out, but it's a way for the IRS to track who's paying who, so people aren't trying to like start a business and then hide a bunch of money from the government. You can't do that. So if you get hired by someone and they go, hey, I need you to fill out this W-9, you're like, what the crap is that? So a W-9 is just an information form. So it's telling the person that is going to be paying you what your legal name is, what your legal tax ID. So it could be your social security number. You could go to irs.gov and get a free business tax ID that's separate from your social security number, has your address and how you file your taxes. So the majority of us are still filing as what's called a sole proprietor. So a sole proprietor, your taxes are not separate from your personal taxes. It all just goes on to one big tax return. And there's different, you know, forms and sheets that feed into your main personal tax return. So if you get asked for a W-9, always say, okay, yeah, great, awesome, here you go. And you can get the form. Like if they don't send you a blank one, you can go and just Google blank W-9 form and it'll pop up from the IRS website and you just go through and fill it out and send that over to that person. And so that way, if they end up paying you more than $600, you're going to get a 1099 at the end of the year. And that just helps you add up all your income. But know that just because you did not get a 1099 from someone doesn't mean you can exclude that income from your taxes. You have to claim all your income, irregardless of whether you get a 1099 or not.
Yeah. So if a business owner doesn't send you a 1099 form, that is on them. They should have done it, but you still have to.
Yeah, or you didn't do a ton of work for them, or there's all this weird muddiness of if they paid you with their credit card or they paid you through PayPal instead of paying you with a check. Yeah, that's craziness. So don't rely on the 1099s to be the math for your income.
Keep track of your own income. So, and a couple of important things that you said there too is, you know, so when someone asks you to fill out this W-9 form, it does ask you for your social security number or tax ID. So you're going to have to put one of those. So unless if you want to be giving your social security number out to all your new clients, then I would definitely get that free tax ID number. And and just that exchange is really good to remember too. It's like, okay, so I get a client, they send me a W-9, I send that back to them at the end of the next year, at the end of the year, if they paid you over $600, then they'll be sending you that 1099 form, and that's what you use on your taxes. So it's a really good, clear-cut way to break it apart. Awesome. So
I see a quick comment about Canadians. Okay, so just because we're still talking about 1099s.
Yes.
1099s are just for US citizens. So if you work for someone outside the US, they're not going to send you a 1099. If you hire someone from outside the US, there's a different type of form. I won't go into that too much, but basically this is all just for US citizens hiring and working for US citizens.
Yeah, some of the bookkeeping stuff we'll be talking about, you definitely, if you live outside the US, still pay attention to this, but just know when it comes to like actual tax forms and percentages and all of that kind of stuff, you should probably talk to a CPA in your own country. So we can't advise for all of that. Okay, so what are some, because this is something that definitely applies to everyone, what are some like big mistakes that you see people making, online business owners, especially when it comes to their tax planning?
So some of the big mistakes I see, first of all, is just not tracking anything. And so then it becomes this huge, like stressful thing when it comes to taxes, because you're like trying to dig through this bank account and this PayPal account and your Stripe account. No. So, you know, like it helps so much to do it throughout the year. And the other one is people who have profitable businesses, like they know they're profitable, right? Like you at least typically know if you're making money taking home, if you're able to pay the bills with your business, then you probably have a profit or you have really high credit cards. But if you're making a profit, you should be setting something aside for taxes. And it's just like, it breaks my heart when, you know, we get to tax time and somebody's like, hey, I made $30,000 this year. I'm like, that's awesome. Did you save anything for taxes? They're like, no. I'm like, oh, ouch. So there's a higher likelihood that you will owe money on your taxes if you have a profitable business. That doesn't guarantee you will owe, because everybody's taxes is different. But just knowing that, have it in your head, like, okay, I'm like making good money now. I should be setting something aside, have a little savings account and throw money in there that you're not taking from, because nothing hurts more than getting your taxes done and having this big balance due and not having any way to pay it. And then you have to go into things like payment plans or putting it on credit cards. And that just hurts.
Would, is there like a certain percentage? Like if somebody sends me $100, like, is there a certain percentage that you would say to hold back?
It's always so hard because everyone's situation is a little bit different. But here's what I will say. You are going to have to pay self-employment tax, which is 15% of your profit. So if you're tracking your money, you know how much, so like your income is just how much you actually like brought in from clients, how much clients paid you. And then you subtract out your expenses and the bottom line is your profit. So you're only taxed on your profit. So if you set aside at least 15% of your profit, that's going to help you know that you can pay that self-employment tax. A lot of people will suggest padding another 10%. So you're like setting aside 25% of your profit every month for taxes, because that gives you that extra boost to cover things like income tax, or if you live in a state that has state tax, you know, there's all these different pieces.
Really high taxes like California.
Yeah. Oh God.
Yeah. So I mean, generally what I'll tell people is I usually tell people to save back 25 to 30% only because, and it might seem like a lot, but if you go ahead and you get that in your head, one, it's going to cause you to reevaluate your rates. And two, then you like don't have the stress around tax time, because it's really unlikely, as long as you're keeping track, that you would have to pay more than 30%. I mean, that's so what I'll tell people to do that. And then when it comes to paying your quarterly or your, you know, at the end of the year, paying your taxes, which we'll get into in a second, then if it's not that much, then you're pleasantly surprised and you've got like this extra money, you know?
Exactly. It's awesome. It's like you get an annual bonus after filing your taxes because you saved a bunch of money and you didn't have to send it all to the IRS. And you're just like, yes,
right? Like, what if we could all just do that? I mean, I know it can be hard, but I definitely, that's normally my recommendation, just to like totally be on the safe side. So let's just ask that question then. At what point, because everyone's like, oh, quarterly taxes, should I be doing those? Like, at what point in your business should you be filing quarterly taxes? And what are quarterly taxes for people who don't know?
Yeah, so quarterly taxes are prepayments into your taxes. So if you think about our tax system in the US is a pay-as-you-go system. So even though we only file our tax return at once a year, we're supposed to be sending in our tax money throughout the year. So when you have a W-2, the money's taken out for you by your boss. They send it in for you. When you're self-employed, it now becomes your job to send it in every quarter, make a prepayment, so that when you file your taxes, the goal is to not owe them any money. Or if you do owe, it has to be less than $1,000. So when you need to start paying quarterly taxes is when you've had your business, filed a tax return, and actually owed money when you filed your taxes. Because not everyone is going to automatically owe just because they started a business and they have some profit. You know, there's a lot of different factors that play into people's taxes. So if you're, you know, I have run my business for years and not had to pay quarterlies because of other factors in our tax situation. But now things have changed and I do have to pay quarterlies. So it's a very, like, it changes year to year. But know that if you filed your taxes and there was money that you had to pay the IRS, that is like the immediate signal of, okay, I'm going to have to start paying quarterlies.
So if somebody's starting a business like right now, like today I'm starting a business, I'm like going to start getting clients now. Would that mean, so it's 2018. I'm going to start getting clients now. Does that mean that I wouldn't really have to, the earliest I would have to start paying quarterlies would be 2019?
Yes.
Okay.
Unless you got like gangbusters 6-figure business. Which would be awesome. But at that point, you should have a tax person to go talk to who can help you calculate those things as well. So,
okay. Awesome. That's good to know. And just, and from my understanding, right, like if you're like, oh my gosh, was I supposed to be paying quarterlies, like, it's okay if you didn't pay your quarterly taxes. Like if you should have and you didn't, it's okay. You just may have like a fine or something, right?
Yeah. So what happens is if you owe more than $1,000 when you go to file your like 1040 annual tax return, then they'll have what's called an underpayment penalty. And they'll say like, hey, we're mad at you because you didn't pay us through the year. And now you're like giving us all the money, now. And so it's not a high amount. I think it's like 1 or 2%, maybe. I mean, it's enough that like it's money you should not have to pay the government. But as long as you pay the full amount due when you file your tax return, then they're kind of like, all right, we're good till next year. So, so you want to avoid paying extra money to the government, but you're not going to like have them come after you because you didn't pay quarterlies, but you did pay it when you filed your tax return.
Okay, that totally makes sense. Thank you for clarifying that. So one of the questions that we got in the group was, what kind of tax advantage retirement account can you open as a sole proprietor? So a 401k, an IRA, an HSA, and before you answer this question too, just so you guys all know, generally, I mean, for the most part, everyone in here is a sole proprietor, even if you have formed an LLC, you still will file your taxes as a sole proprietor, correct? Which means that all of your taxes. So say you're like, okay, I formed an LLC, someone told me to do it, or I wanted to protect my business in that way. Know that the LLC is basically for legal purposes. Like it really doesn't have a whole lot to do with taxes, right? That's like legally you are covered, but you're actually going to file your taxes exactly the same as if you hadn't done that LLC, correct?
Yes, that's exactly right. So an LLC is not a tax entity for the federal. They don't recognize LLCs. You still either, if you're single member LLC, your default is to file as a sole proprietor. If you're multi-member LLC, your default is to file as a partnership, and then you can submit paperwork and elect to file your taxes as an S Corp or a C Corp inside of your LLC. But that's, down the road, usually not something you want to start out with.
Yeah. Okay. Cool. Awesome. So about the retirement accounts then, are there like special retirement accounts that you can open as a sole proprietor, 401ks, HSAs, IRAs, any of that?
Yes, there's some awesome things that you can do that you have available to you when you're self-employed that you don't when you're a traditional employee. So anyone can open, an individual traditional Roth IRA, and they can put $5,500 a year, and that's the max that you're allowed to put into that account. When you're self-employed, there are 3 additional types of retirement accounts you can set up. So one of them is a solo 401k. So you can set that up, with an investment advisor. There's what's called a SEP IRA. And that one, you can put up to $55,000 a year. Yeah. And all of these, if it's a what's called traditional, how it works is the money that you put into these retirement accounts offsets your taxable income. So it's non-taxable now. And then when you're retired and you take the money out, that's when you pay tax on it. And then the third kind of retirement account is called a simple IRA. And so that one is usually better if you have employees and there's, you know, matching and all that kind of stuff. So those are the three main types of accounts that you can do. And they allow you to contribute a lot more than just a traditional IRA individually. So it can really help reduce your taxes by paying your future self.
Right. And I mean, that's something really to consider for those of you who are starting to make this your full-time income. You know, as a freelancer, as a sole proprietor, your retirement is not set up for you by your company. And so, I mean, really to start thinking about, if you know you're going to have to pay taxes this next year anyways, then go ahead and throw some money in an IRA, because that's going to help reduce your taxes overall, and you're just basically paying yourself instead of paying the government. So, yay for that.
Exactly. It's really awesome. Like, and that's why I try to like tell my clients when you're thinking about retirement, and because a lot of us, like, especially when you're self-employed and you're in your first couple of years, like, you don't really think about that. But anything that you're putting into retirement, one, it helps you on your taxes now, and two, it's paying your future self. Right? Yeah. Like, it's not, you're not wasting money. You're not losing money. You're just paying your future self.
That's awesome. That's awesome. I have a friend. He was talking. He's so funny. He's like just very flippant about money. And he's like, he's like, is it bad that I don't want to pay for your, or what did he say? Is it bad that I don't want to save for retirement? I'm like, forget you, future self. I'm working hard now. I'm going to spend my money. I was like, like, he literally said that. He's like, go get a job, old man. I'm like,
oh my God, no, I do not want to be 75 and still having to work.
I'm not going to refer him to you to do his bookkeeping.
I want to be on the beach.
Oh my gosh, so funny. So funny. Okay, so hopefully, so don't be that guy. If you're watching, I'm not going to say his name, but know that I still okay, let's see. Okay, let's talk then. Well, we kind of answered the question then, what are the tax benefits of becoming an LLC? Really, the benefits aren't in taxes. It's in
it's in legal.
As far as being a legal entity.
It does make it easier to file your taxes as an S corp as your profit goes up, because the the requirements of an LLC versus the requirements of a formal like corporation that files S corp are different. So you don't have to have all these like board meetings and minutes and binders and all that kind of stuff. So if you're planning on staying in the same state that you're in for a while and not moving around, then forming an LLC can be less expensive than going full all into incorporating.
Mm-hmm. Yeah, I think that's probably the route that most of us should be going, is forming that LLC. Awesome. Okay, well, let's ask tax write-offs then. That's one of the main questions, and then we'll do some Q&A time. So what are some write-offs that maybe, that we may be forgetting about come tax time? What is it that we can and cannot write off as a business expense?
So when we're thinking of virtual assistants in this online business world, the core of our expenses are software and equipment. Like when we have to buy a new laptop, we have to buy a microphone, we have to buy a webcam, all that kind of stuff. And then just our general office supplies, because like we're still human. We still like pretty things and having stuff around and all of that. So
I get like a pretty new office chair, because this one I'm pretty sure we got at a garage sale or something. Yeah. We do my office when we get our new house. What like with that, if I buy a pretty new office chair, like is that a business expense?
Absolutely. Awesome. Because I mean, you're sitting in it at your computer to do work. You're not like refurnishing your whole house and trying to say it's for the business. But yeah. It adds
Awesome.
to.
Okay. And then, so like online courses. So if somebody ends up purchasing the VA Bootcamp, or if you're a member of our Savvy Tech Lab, anything that you purchase as far as courses or software that's directly related to your business, you can write that off, right?
Yes, absolutely. Anything that you're buying to improve yourself as a business owner or grow your business. So whether that's a group program like yours, whether that's a one-on-one coaching relationship, or just some of these like awesome ebooks and PDF guides that you can get, a lot of us will buy like a $7 download that's like, how to do this. And I'm like, oh, thank God that was worth every penny that I just paid. But all of those little things that add up. And then the other thing that we often forget to look for is apps that we buy on our phone because we use them for business, but it may not, like our Apple account may not be connected to our business card. It's hard to like have two different cards on your iTunes or your Google Play account. So going back through and seeing like what apps did I either buy one off or what apps am I paying monthly for, but are specific to my business. Like, hello, Voxer. I love Voxer.
So smart. Yeah. I actually just purchased an app for Instagram scheduling, and I'm like, I'll not use my business card for that.
Yes,
got it. So awesome, good idea.
Yeah. So going back, that's one place that a lot of hidden expenses end up. And the other one that we tend to overlook is, a lot of us make runs to Target, Walmart, whatever, and we're primarily there for buying personal stuff, but then we see something cute for our office, or we go, oh God, I'm running out of pens. I need to go get some more pens. And we just throw it in with our personal purchase, and we never write it off because we bought it on our personal card. So keeping an eye on those things, or just getting in the habit of, once you've set up your separate business account, when you go up to the register to check out, just do 2 transactions. Say, this is personal and this is my business stuff. And it just takes habit building, but it can add up really fast.
Yes. Now, what about, because I feel like I've gotten this question a lot. What if I go and work for the day at like a coffee shop or a restaurant, or if I'm meeting a client for coffee? Is that considered a business expense?
So meals and entertainment, they get a little stricter on because they don't want people just like throwing every little thing in there. So technically, if you go just work at Starbucks for the day by yourself, you can't write that off because that's considered a personal meal. Gotcha. But if you're meeting clients, if you're going to networking events, if you're co-working with other people, and you like buy a meal, especially if like you go and meet a client, if you work with local clients and you buy them coffee or buy them lunch, then that's totally deductible as meals and entertainment. And how it works on the taxes is that you keep track of the full amount that you've paid for these legitimate meals. And then when you go to file your taxes, it's reduced by 50%. So you only get to write off 50% of the total amount you spent. So keep that in mind too, because they're thinking like, oh, well, you paid for so-and-so, so you're writing off the meal you bought them, but technically you're not writing off the meal you bought yourself in theory.
Gotcha. Good to know. So
yes.
And then in relation to business travel, so say I'm going to go to a conference, I'm going to go to the Savvy Tech, or I'm going to go to the Virtual Savvy One Day event in Nashville. What all would be a write-off? What all could I write off? Could I write off my hotel? Any meals there? How does that work?
Yes. So when you're traveling outside of your like home base area, that changes everything because travel becomes 100% deductible. So meals while you're traveling are 100% deductible. Hotels, flights, Ubers, however you get to where you're going and what you spend while you're there, as long as it's, for you, then that's 100% deductible. You can't necessarily like take your family on vacation to Disneyland and meet a client there and write off the whole trip. That doesn't work. But
although I do have a friend who her entire business is helping other people plan their Disney trips. And she literally started the business so she could write off Disney because she works while she's there. She's like doing live streams. So unless that's your business model, which is an awesome business model, everyone's like,
I know.
I'm switching to that.
I know, right?
But, okay, so let's take some questions from the audience here. Thank you so much. I mean, already this has just been, you guys loving this? Let me know in the comments. I am, oh my gosh, loving this so much. Melissa is a wealth of knowledge. So we have a few questions here. Danita, I think we answered this, but just to kind of recap, if I made less than $600 with a client, do we have to report it?
So yes, regardless of whether you don't have to file a 1099, but regardless of whether there's a 1099 involved or not, any money that you receive from people, you have to claim as income on your taxes.
Let's talk a moment. I know it's a gray area, and if you guys get confused about this, hit Melissa up and hire her for your taxes if you have questions about this. But what about if people are paying us through PayPal or FreshBooks, or is there a time when, like, does that gray anything? Like, how does that work?
No, so it doesn't, so how they're paying you, like you as a business owner, whether you get paid through 5 different ways or 1 different way, whatever money you receive, you have to claim as income. Like it's ultimately your responsibility to track your income and track your expenses and claim that on your taxes. So 1099s aside, that's your job. So that's why it's nice to have a system like FreshBooks or Waive or QuickBooks, because it allows you to have all your invoices in one place and like all your payments in one place. And you go, okay, at the end of the year, this is exactly how much all my clients paid me. Bam, that's the number I need to put on my taxes. But yeah, so you just need to be responsible and know that 1099s are a hot mess a lot of the times, and you're either going to get
once you have this, and if you're say you have subcontractors, you're paying, and you pay someone over $600, then you're going to have to pay. You're going to have to give them a 1099.
Yes, that is correct. So if you're hiring subcontractors, you're going to have to send them a 1099, and that is primarily if you pay them through cash, check, or direct deposit. Okay. And then there's this weird, funky little thing about if you use the PayPal friends and family option to send money, that counts as direct deposit. But it gets a little muddy. So yeah, I actually wrote a big blog post about this because it gets so weird.
Yeah. So let's see, what was I going to ask? So if I'm going to pay someone via PayPal, I should use one or the other, right? Like,
yes. And the best option, honestly, if you're using PayPal, is to always say that it's for goods and services, because one, that adds the PayPal protection for both of you so that you can actually go through the dispute process. Because if you do it as friends and family, like there's no protection on that money. Gotcha. So there's no, like, PayPal's not going to have your back either way. So think of that on both sides. Like you're trying to avoid the fees, but the fees are what cover like the dispute stuff and all of that. Yeah.
Okay. Good to know. Oh, this is so good. All right. I'm not sure if I even know what this is. Ssi Tax?
Okay. So Social Security. So when you're self-employed, there's that self-employment tax, and that's what actually covers your Social Security and your Medicare taxes. So if you have a W-2, you'll see those broken down like on your W-2. But when you're self-employed, you pay into the system through your self-employment tax, which is that 15% tax we talked about earlier.
Which is why go ahead and say 30. So you're complete.
Yeah. 25. That's only half your tax that you pay is self-employment tax. There's
state taxes and others as well. Okay. At what point should we hire a CPA or a tax person to help us prepare our taxes?
Oh, that's a good one. Okay. Well, I'm slightly biased. I'm going to be honest.
Right now you should.
But I mean, honestly, here's the bottom line, whether you own a business or not, if there's a point when you're trying to self-prepare your taxes that the tax software is asking you questions and you have no idea how to answer them, then you should go talk to someone. You know, it's the same thing if you're working on your car and you're trying to figure it out with YouTube and they say a bunch of words that you don't even know what that means. It's time to take it into someone who knows how to work on cars. Mm-hmm. So I think the biggest fear that people have with hiring a tax professional is that it's going to be super expensive. And the reality is it doesn't have to be. Yeah. So prices are going to vary like crazy depending on where you live and what type of office you go to. But it's perfectly okay to go and talk to a couple different tax people and find out like what their range of fees are and find the person that you really connect with and understands you and your business. And then, you know, figure out like, is this a priority for me? Do I really want to screw up on my taxes? Probably not. Okay. It's an investment.
I mean, I was a person that always did my own taxes. I used TurboTax and it is so easy. Like it just asks you the questions. And so when I was nannying, like way back when I first started thinking about doing an online business, I was nannying at that time. And it was so simple. It was just like, okay, I had one person paying me. They issued me a 1099 and it was just like, oh, boop, 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 boop. This was super simple. And then, but once I started my VA business that year, I like moved to I lived in like 2 or 3 different states. My husband had done an unpaid internship. I was like hiring subcontractors. I was like, CPA. Yeah. I don't want to do it. So if you have this like fear, oh my gosh, am I going to mess it up? It might be good to just talk to somebody. Exactly. Awesome. So just to clarify, Anne asked, when filing your taxes, you only claim the amount of your profit instead of all your business income. So you do need to input all of your business income, but on your taxes, it's going to break apart and ask for different expenses. So it will, like, in your taxes, you'll list all of the profit you made, whether someone sent you a 1099 or not. List all the profit you made, even if it was under $600. Yes. List all the profit that you made. And then it'll have, you know, the places for you to break apart those expenses that you had. Yeah, as well.
Exactly. So the form you're going to be filling out is called a Schedule C. And you're just going to, claim all your income, then deduct all your expenses. And that will come up with either your profit or you may have a loss on your business. And it's okay to have a loss on your business. And you want to go ahead and file that if you have a loss and you have other income. Because the IRS doesn't know you've had a loss unless you file a tax return. Mm-hmm. They just assume you got paid and had no expenses. And second, like if you also have W-2 income, you have a spouse that has W-2 income, you can actually lower your taxes because of the offset of income. So
I do know that if you don't make money, I found this out. If you claimed a loss on your business, then you cannot, if this is your only job, then you cannot do the child care credit. So they think, oh, you were at home, you could have been watching your own kids because your business didn't make money. That one made me mad.
Oh, yeah. No, there's a lot of things that you can't, like credits and things that you don't qualify for unless you actually have like positive income.
Yep, which I understand, I guess. But what if you take business calls on your personal cell phone? Can you somehow account for those as a business expense?
Yeah, so this one is a little bit of a gray area, to be honest. And you'll ask 5 different tax preparers, and they might give you 5 different answers. And you ask 3 different IRS agents, and they'll give you 3 different answers. So again, taxes are not as black and white as we believe them to be. But my belief is if you document, how you're using your cell phone, if you can show kind of like what you're using it business-wise versus personal-wise, and you have that, then you can take a percentage of your phone. I usually would not recommend taking more than 50% of your cell phone bill as a deduction, because at that point, you're kind of like, well, maybe I should just have a separate business line or business phone. Most of us are just like, well, why would I ever do that? I'm like, well, because if you add a second line and have a second phone that's just for business, A, you can set really good boundaries, and B, you can write off the whole thing. So
get a little cheapy phone for yourself and then use the other one for business.
I know, right? Like, seriously, go hit up Straight Talk at Walmart and get
I'm not gonna lie, pretty much everything I do on this phone, I don't talk to people anymore. I just do business. Y'all are my friends.
Right. You're like, I text my husband and my mom.
What I do. I just moved to a new state. Those are the two people I talk to now. Okay, cool. This is so helpful. Are you guys just, oh my gosh, I'm loving this so much. All right, so we have, let's answer these last two questions. This one is not quite a tax question, so we're just gonna hit it briefly. Okay. Do I need to set up an LLC right away, or can I wait to get more established and have more consistent income? So remember, an LLC doesn't really change your tax status at all. Whether you're an LLC or not, whether you have formed that or not, you'll still be filing as a sole proprietor. So it doesn't really make a difference on your taxes. What it makes a difference on is legally. And if you go to thevirtualsavvy.com and you type in Danielle Liss, or type in legal in the search bar, you're going to find a blog post and actually an interview very similar to this with my good friend and attorney, Danielle Liss. And she is amazing. And she goes over really, really in depth really the benefits of an LLC or not. So
there's two sides. There's the legal side and there's the tax side. And so like we talked about the tax side, but you definitely want to talk to the lawyer for the legal side of that decision. Yeah.
So go check out that blog post. All right, one more. Can I write off PayPal and waive fees?
Oh yes, 100% you should. So that's one thing that people will do, is they'll often only claim the income once it's been transferred into their bank account and not claim the actual like invoice amount. So if you're using Waive or PayPal to invoice and they're paying through that, then you're having fees taken out so that you can get paid faster, right? Like that's really what you're paying for, is the ability to get paid faster. So you want to, when you're filing your taxes, you want to claim the full invoice amount. So, you know, if you invoiced $1,000 and you had $10 in fees, you're going to claim $1,000 of income, and then down on your expenses, you're going to have like an item that is fees, and claim that $10 in fees. So yeah, you definitely want to claim those. Don't leave those hanging out on the table, because they end up to add up a lot.
Awesome. Oh my goodness. Well, this has been so incredibly helpful. I am sure that you guys all have loved it as much as I have. I know I learned something today, so I'm sure that all of you did too. Melissa, if people want to find you, if they want to hire you to do their taxes, if they have questions, where should they find you?
So you can find me at my website is melissawhaley.com. So easy to find me there. I'm also, you know, I hang out a lot on Facebook and Instagram. So my Instagram handle is just at Melissa Whaley. And on Facebook, my page is Melissa Whaley Tax. So hit me up if you need help with your taxes. I am very happy to help you guys. And it's all online, so you don't have to come see me. Yeah. We can just video chat like this and do your taxes.
Since you're in California.
Yeah.
I came and saw you like not that long ago.
I know, but that was
hanging out
for fun.
Hanging out with my girl Melissa in California. Yeah, awesome. Thank you guys. Thank you so much, Melissa. Everybody here. I know we're getting lots of love in the comments. I love this. Everyone's saying thank you, thank you. This was amazing. I like how user. Oh, this is awesome. Oh, such good feedback. I have to put this. I love how user-friendly your advice is. Many times accountant types will talk really, really fast and assume we're all keeping up, but we're not. This is so good. And this is actually one of the reasons I hired Melissa, is because she just broke everything down so simply, made it all make sense. I just know that, you know, my finances are taken care of, something that I've not always been great at in the past. She just came in and saved the day. So much love to Melissa. You guys all check her out at melissawhaley.com. And hey, if you're listening into this and you're like, all right, this is awesome, and I've just been taking a ton of notes, but I actually haven't started my business yet. I'm just doing all the listening and preparing and deciding if this is for me, go to virtualassistantchecklist.com. That is going to be my free checklist for how to start your own virtual assistant business. You're going to love the checklist. It's a checklist and starter kit. So I actually have a full detailed checklist of exactly what you need to do to get started, as well as some of my favorite tools and resources that you can use for your business. So thank you again. It's really cool. Thank you again, Melissa. You guys have an awesome day.